Evening, it's Quantrade Edge, and right now we're stalking live a trade in gold. It's the flagship Forex trade, and I happen to be by my old computers that have the microphone, so I figured I may as well record a video about it. So if you remember, this is the December contract of gold, and gold has been in this triangle for quite a while. And if you notice, the issue with triangles is you would have thought that was your first breakout in June, and then if you readjusted your line, you would have thought that was your breakout later in June. If you readjusted your line, you would have thought that this was a breakout in late July, and then the latest failure came on Friday, where we left a big tail up above and then came back down below. And the same thing's happening on the bottom side, where you would think that this is your trend line and that you broke it to the downside, but then it just keeps expanding out a little bit. And that's common for these types of triangles. But what really helps us understand that this is a good sell is a divergence in the 2-period rate of change. Between this high right here and this high here, based on a closing basis, we had much less momentum going into that second push, which gives us the plan, it makes it probable that this will come back into range. And in one of these triangles, 61.8 is a good target for retracements, so we know that there's still room to go. But the idea, again, is we're not using stops that are of the daily size. We're waiting for a small ABC pattern or other type of consolidation pattern to form on a shorter time frame to get much bigger multiples of return on our risk. So this is the daily chart. We know that as we get below Friday's low, which we've already done, we want to start watching it for the Forex trade. So I'm going to X out of this daily, and what I'm doing is I'm watching 3 different time frames. I'm watching the 3-minute, the 5-minute, and the 9-minute. 9 can be 10, it really doesn't matter. It could be 15. 15 has this big outside-ish bar. I don't really like it. Let's put it back to 9. And what I'm watching for is the ABC pattern. Right now, this is one clean leg higher, and then this is the first inside bar there. So we have one leg up here, which may or may not be done. We have the same thing going on the 5-minute. And again, what we're looking for is a down move and then an up move. And then we can put in a sell stop below whatever bar makes that final move. And that will be our very tight stop of, say, $2, $3, $4. We won't know until the bar is formed. And we've got quite a bit of room to go for. Like the minimum we would go for would be this 1.272. So if this ended up being real, 43 to 46, call it, we have 43 down to 27. We have $16 to make on that $3 or $4 risk. So again, right now this is all just an artist's rendition. We don't know where this is going to end, but we're watching these bars form bar by bar to get our ABC pattern and be ready for the short. So that is how we do the Forex pattern. We take a good potential daily short level and we wrap it in this very smaller time frame ABC so that we get a really small amount that we can risk, which means we can trade more contracts for the same amount of risk. And maybe I'll do a follow-up video and show you how this played out, or if you're watching it now, you'll look at it and you'll figure that out. But that's basically the crux of what we do. If you like these type of trades, I'll put a link in there for the Discord, and you're welcome to join us.